Welcome to the Bleeding Edge Report with Chris and Treg, where tech meets its match.
Hey, Treg, good morning to you. And good morning to everyone. Welcome back to another episode of the Bleeding Edge Report with Treg and Chris. And this week, it's Treg's turn to share with us something about the technology industry that we didn't know before. And Treg, I hope you have something really good for me, because right now, when I look at the tech industry as an investor, I'm not very happy. So I'm sure you have something that's going to really light me up and get me excited about what's going on. So lay it on me. I'm ready.
Okay. Hey, first thing before I jump into what I'm going to talk about, I just wanted to mention something that happened in California. I don't know if you heard, but someone submitted a term paper in their ethics class that was completely written by Chat GPT. Did you hear about that?
Of course they did.
They got busted. They got busted. The professor goes, well, it sure seems like, the language seemed to be a little computer generated. It seemed to be, pretty dry. And even though it was accurate. So, right. And that professor said, no more term papers from now on. You got to come in and you can present everything in person. So
that makes sense. That makes sense.
Good policy. The first roadkill for Chat GPT in California at schools. So.
Well,
anyway,
I do love that you bring this irony to me, because you know how I love irony. Ethics classes, it's wonderful.
Yeah, we got, as you know, we have irony coming out our ears most of the time. Okay, so this week I want to talk about who turned off the water. And what I mean by turned off the water, I mean, who in the heck or what the heck happened to all the tech IPOs? Right. And where are IPOs at in general? And the funding for startup tech companies or medium-sized companies trying to get funding. What happened? Everything. I was looking the other day because I was looking at, I own an ETF called IPO, which is down 40%, I think, in a year. And I'm going, okay, what the heck is going with IPO? Anyway, So I did some research, and here's what I found out. Okay. I'm going to give you the timeline. 2020, COVID hits. Okay. COVID hits. And then we all know that everyone that had anything to do with technology, whether a user or technology company, everyone's thinking, okay, we can help solve this with technology, because we can have surrogate interactions, in-person interactions. We can create those. So the idea was, okay, we're going to create technology. So there was this new demand for all this technology. Zoom blossomed. Everyone's thinking great, and then. So that came around, and then, IP industry and stuff with, even with COVID, was doing well, okay? And interest rates were down. There was a lot of institutional investors looking where to park money. And then in 2021, it took off. Actually, the record number of IPOs and SPACs total was over 1,000 in 2021. 685 IPOs just in 2021, compared to 100 or so the year before. Or 150.
That's huge.
Yeah, so 500% increase. So there was a huge run on funding, and the reason was interest rates were low. Right. Okay, so everyone's looking for alternatives to make money, and a lot of equity sitting out there. And then the vaccines came around, thinking, okay, well, we're going to have COVID not beat, but at least we have it tamed, where we can survive. Economic recovery is coming back, and investors kind of gain more confidence. So 2021 was this bust year with IPOs, especially technology IPOs. And then next thing you know, 2022 hits, right? And this is what I call Houston, we got a problem. Man, it just fell apart and imploded on itself. Too high supply IPOs from 2022. IPO performance, the earnings, came in on an average of a negative 14% the first couple of quarters, compared to a positive 14% on average for IPOs. So they had terrible earnings. Inflation hits, interest rates rise, you got stagflation, spending, technology goes down quite a bit, saying, hey, COVID's beat. Maybe we don't have to spend all this money right now. Oh, by the way, I don't have any money to spend. And we know that from we talk with enterprise technology buyers all the time. So that, so anyway, major problem. 2022 basically hit the skids. And so the water got turned off, especially with high tech. Okay.
Yep. Mm-hmm.
So what's going to happen 2023? Well, it doesn't look like things are changing. There's only been like 18 IPOs, I think, in 2023 so far, and
Yeah.
hardly any tech IPOs. There's tech IPOs planned, but whether or not they come to fruition, I don't know if it's going to happen.
Yeah.
But
Customers are still holding the purse strings tight on the
Yes.
tech spending.
So we deal with technology companies, we deal with startup companies, we deal with medium-sized companies, we deal with enterprise companies, right? Worldwide companies. That's who our clients are that we work with. So given this, I thought it'd be a good idea to walk through a little bit about what we maybe recommend some of our clients or maybe potential clients or other companies walk through what we recommend them maybe looking at or moving into based upon our experience. I've been dealing with technology companies and been a consultant technology company since 1991. Okay, so I worked with probably 200, 250 high-tech companies. So I've been through the ebbs and flows. And I think I have a pretty good idea of which companies and their strategies seem to work during the ebbs and the flows. So in this situation, where I see it is there, those companies that have, either have good in-house product development, service development teams, okay, where they can go after new markets or go after changes, because there's two ways a tech company can make more money. Either they get more customers or they get more money from existing customers. So getting more money from existing customers can be very difficult. They're going to have to go after trying to get more customers. And it's going to be very hard because the competitive landscape is just terrible right now. Okay.
That's right.
So, but those companies that already have a good product development, service development team, they're going to have to use that existing HR, that existing payroll to try and come up with as many new solutions, to see what's going to stick on the wall and to go after those markets that are low-hanging fruit. So I know those companies that I've worked with in the past, especially during the dot bomb bubble, what they did. They immediately diversified. They immediately had teams that could do other stuff. So that's one area. Another area is, with the partnering and the mergers. And I forget the term that you used to use. What do you call it when you're partnering with a competitor? What do you call that?
Co-opetition, right? So that's the term. And it's easier said than done. So,
yeah,
the first two bullets you have here are rolling on your own, right? You just continue and you get the most productivity and value and teamwork out of your own organization. You get into partnering. Yeah, there's a great opportunity. And I completely agree with what you're saying here, but it's difficult, right? It's, you've got to get two teams working together and you got to communicate properly. You've got to trust one another and
trust.
Yeah.
Trust. I mean, it's time to do a little kumbaya with your competitor or someone that's, maybe not a direct competitor, maybe an indirect one. That, but the thing about it is, having access to another customer base, getting access to another 10,000 customers where maybe they can upsell them on something, they can get a percent, and then you do the same with them. That's kind of where those opportunities. And it's not necessarily about getting funding. It's just about everyone not being selfish, because now is the time not to be selfish on stuff.
Agreed.
And then new fundraising platforms, right? There was Kickstarter. That was kind of more of a, give them money type of thing instead of invest. But now there's a new one that you saw the other day. What was that one called? It was Start
Engine. Yeah.
Start Engine.
Yeah, that's right. So basically it's pretty interesting, right? Because it's an advent of the proliferation of access to the internet by everyone across the country and technically the world, but it is a platform to allow the public to invest in startup companies. That's essentially what its value is. So on the back end, it's attracting companies looking for funding to join their platform. And then they advertise and market to individual investors to invest in particular companies. The most famous example of their work was the launch of Boxable, which is, as you might recall, it's buildings, smaller buildings that are designed in order to ship flat from the factory. So they're factory built buildings, but they're shipped flat on a truck.
Right.
And then they set up very easily. And that got a huge boost because Elon Musk is probably the most famous customer, right? With his place at the Tesla factory. So, so there are others besides Start Engine, but that's probably the most, the biggest one at the moment. And I'm not, by the way, I'm not, promoting them at all. And there is a lot of risk. So, explore it and educate yourself. But to me, it is a marker from the startup side that this is another channel that you could explore for funding.
Yeah.
So I think it's significant.
Yeah. And the only thing I might add to this is the level of knowledge that these companies really need to have if they're going and making changes or trying to tackle a new market or something like that during these times. Okay, because mistakes of that caliber during these times can be extremely costly. And we've seen that. We saw it with 3Com. We saw it with HP when they picked up Compaq. When you make a move, and some of these really big move, we've seen a lot of big mistakes where it's almost like they haven't done their due diligence to understand how the market's going to react to these decisions. Yes.
There's that, but at the end of the day, it comes down to execution as well, right? So you have to have both. You have to know your market. You have to have your strategy, but then you have to execute it. Because I've seen cases where the strategy is correct. It's the execution where they fumble, right?
Yeah.
And that's why partnering in mergers.
Yeah.
You have to be on it. You have to micromanage that and really get everybody on the same team in order for it to work. And but I'll say this: the ones who can do those are going to be the winners.
Yeah. Well, the ones who come up with a good strategy and execute on it. I mean, we deal with strategy development. That's where you and I deal with companies, right? We're on the strategy development side. Rarely do we get involved with execution, although in some ways we get involved with execution when it comes down to coming up with sales strategies or something like that. But anyway, I think strategies are big in terms of making sure you do due diligence and you're not just going off gut feel, because this is a very difficult time to be going off gut feel.
It'll sink you.
It'll sink you. We've seen it a lot. Yes. Okay. Well, that's what I have for today.
Well, it's not exactly the advice I wanted to make money in the tech market, but it's reality, man. And this is a tough time. So if you are an investor watching our video, just remember, 2023 is not going to be a tech banner year, right? And it's probably true that that'll linger a bit into 2024. We'll see how it goes, and we'll do an update as we move forward. But Treg, this is a really good piece of analysis because it's a critical part of funding the growth and development of our technology industry in this country. Yeah. So thank you very much for sharing it.
You bet. And hopefully for some of our clients that watch this, or some future clients or something like that, this helps them out a little bit from our perspective of kind of what's going on and some of the major areas of strategy that we've seen kind of work during these times. So I appreciate it, and thank you very much.
Please like and subscribe if you like this video, and we'll see you on the next one. Thanks again. Bye-bye.
Thank you. Bye-bye.